Alright, so I would like to explain about what is the MFRS 8. MFRS 8 is about how companies report their different business parts called operating segments based on what the main decision maker inside the company uses to manage and allocate resources. It requires companies to show financial information or these segments that is regularly reviewed by the management to help users understand the business better. Each segment's profit, assets and other key information must be disclosed, along with the reconciliations to the overall company figures. This approach makes the financial reports clearer by showing how different parts of the business are performing and contributing to the company's success. It's all about the reporting that the business in a way that matches how management sees and runs it. This helps investors and others get a more accurate picture of where the company makes money and faces the risk.
So I'm gonna explain what is chief operating decision making. So the first one is chief of decision making is to allocate resources and assess the performance of operating segment, and is likely to vary from entity to entity, and it may be the CEO, the chief operating officer, the senior management team, or the board of directors, depending on how the company is structured and how decisions are made. So the next one is the title of the person identified as chief of decision making is not relevant as long as it's the person responsible for making strategic decision about the entity segment. So the example in chief of decision making of IHS Healthcare is Group Chief Executive Officer of IHS Healthcare is Dr. Frank Kumar. 9. The Group CEO is responsible for setting the strategic direction and driving the sustainable growth of IHS Global Networks, leading the management team and overseeing the entire organization operation and performance. So the next one is Chief of Decision Making in Pharma Niaga. So the Managing Director, Datuk Zulkifli bin Jaafar, acts as the Chief of Decision Maker, responsible for ensuring that all major business activity align with the company. So I'm gonna explain the two types of segmental report used in financial reporting. So the first one, we have a business. So a business is a distinguishable component of entity that is engaged in providing an individual product or services or group of related products, and that is subject to risk and return that are different for those of other business segment. So the second one, we have a geographical. So a geographical segment is a distinguishable component of an entity that is engaged in providing an individual product or services within a particular economic environment, and that is subject to risk and return that are different from those of other economic environment. So business segmental report in Pharma Niaga Berhad, as you can see in the table, is a logistic and distribution in Malaysia. So distribution, trading and wholesaling of pharmaceutical and medical product that supply and install hospital equipment. The logistic and distribution segment is the largest contributor to revenue and profit. So the next one is manufacturing in Malaysia. So production of pharmaceutical product in Malaysia. The manufacturing segment provide important intern support via segmental report. So the last one is Indonesia, manufacturing and distribution. So both manufacturing and distribution pharmaceutical and medical product in Indonesia. So the Indonesia segment is smaller but see as a growth region for the future. So example from Pharma Niaga is using geographical segment reporting that is show the profit separately from the country that Pharma Niaga do their business, which is Malaysia, Indonesia and other country. Actually, this show most of Pharma Niaga operation and asset are based in Malaysia, but Indonesia and other country is seen as important expansion market.
Moving on to the two key benefits of segmental reporting for financial statement users by referencing segmental reports from Pharma Niaga Berhad. First, better understanding of business performance. Segmental reporting breaks down the company's financials into different business areas or geographical regions. This helps users see how each segment contributes to the overall results. For example, Pharma Niaga's segmental report shows different business units clearly, such as logistics and distribution, manufacturing in Malaysia, and manufacturing and distribution in Indonesia. The logistics and distribution segment reported the highest revenue, amounted 2,578,000,000 and 328,000, and a profit before tax that amounted of 157,423,000, which tells users this segment is the main contributor to the company's earnings. This detailed information helps users quickly identify the strongest and most profitable parts of the company and improving their understanding of where the business makes its money. Second, improve risk assessment. By disclosing segment-specific financials, users can assess exposure to different risks in various business activities or regions. For example, the segmental report reveals that the Indonesia segment has lower revenue, which is 1,178,000,000 and 206,000, and the profit before tax is amounted 4,347,000 compared to Malaysia segments. This highlights that the Indonesia business, while smaller, is a potential growth area but also comes with a higher economic risk. User can evaluate the company's exposure to the different markets and risks by studying the segment specifics, supporting better investments or business decisions.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Ashraf bin Muhammad Noor. My matric number is 2025-170 and 227. Okay. Next, we will explain about MFRS 134. MFRS 134 is a standard that guides companies on how to prepare interim financial report, usually every quarter. It sets the minimum information that must be included, and it ensures the report is prepared consistently with the annual financial statement. The purpose is to give user timely and reliable financial information during the year, not only at year end. The first significant financial event we need to highlight in Axiata Quarter 1 2022 performance is the substantial foreign exchange or FX losses recorded amounting to RM476.9 million. This considerable loss was primarily triggered by the revaluation of the US dollar against various local operation currency within Axiata's portfolio. The impact was particularly pronounced in the overseas operation, most notably in Sri Lanka, where economic volatility magnified the currency exposure. This single non-cash item had a significant and negative effect on the group financial result, ultimately weighing down the overall profit reported for the interim period. While underlying operational performance might have remained sound, this FX loss severely eroded the reported bottom line.
For the second significant event, Axiata issued a new ordinary share under its performance-based long-term incentive plan. A total of 1,817 new shares were issued at a fair value of RM4.11 each. This affects the company equity and show ongoing employee incentive program. This information can be found in the slide. Next, let us look at the interim reporting period that Axiata followed in its financial statement. For the income statement, the company performed a comparison of 3-month period end 31 March 2022 with the corresponding 3-month period end 30 March 2021. This allows users of the financial statement to evaluate the company performance over the same period in the previous year and to identify the trend in revenue, expense, and overall profitability. Okay, we moving on to the statement of financial position. Axiata compared the figure as of 31 March 2022 with those report at the end of the previous financial year, which is 31 December 2021. This comparison provides insight into change in the company assets, liabilities, and equity over 3-month period, helping stakeholders to assess the company financial health and stability at a point in time. Finally, the cash flow statement, the reporting period considered are again the 3-month and 31 March 2022 versus the 3-month and 31 March 2021. This enable a evolution of the company's cash flow and outflow from operating, investing, and financing activities over the same comparative period, highlighting any significant change in liquidity or cash. All the dates and period used in this interim financial statement are taken directly from page 14 and 15 of Axiata Interim Report, which clearly outline the comparative period and the methodology used in presenting the financial information. Thank you.